Hey, what's up, everyone? Hope you guys are doing really well. Yeah, so today we're going to discuss about leveraged yield farming. Okay, so this is one of the high risk DeFi strategies, and we're going to be taking a look. It's a continuation of like our previous two videos, what we have done for like shadow tokens. One is you could create a pool and add liquidity and become an LP. And the second one, we looked into how you can go ahead and lend your shadow token in Francium and in Tulip Garden, which is like more like a single site staking. And this one is for leveraged yield farming. So as you can tell, leverage, okay, what does it come to your mind? Risk, okay? And so that's why this is a high risk strategy, all right? But let's just go ahead and see like how you can actually do it, okay? By no means this is just for educational purposes, and by no means I'm advising you to do this, okay? So I hope you understand that, okay? And people do this or because depending on how they look at the market, you know, whether they are long or whether they are short on an asset, depending on that outlook of the market, they go ahead and do this. And maybe they like risk, you know, who doesn't like risk? You know, like if it's risky, that means it's more return, okay? So you always have that. If it's less risky, low returns, okay? So however you want, but always, you know, try to manage that risk properly, or to the extent that you're comfortable. And then secondly, think of the return. So risk first, then return. All right. So yeah, make sure of that. All right. But let's go ahead and quickly look into some theory of leverage yield farming. Okay. So tulip, just go ahead and like just type in like tulip garden. Yeah, and just type in medium. Okay. Just Google this, and let's see. Wait. Okay, let's go ahead and see. Like, let's see. You can find some educational content on their Medium. You know, previously it was called like Tulip Garden was called Soul Farm in the beginning. Okay, right in the beginning. But yeah, since then they rebranded. But the logo is the same. It's just the name they changed the name. All right, so anyways, so if you take a look into like this, I'll leave this link right in the description so you can go ahead and take a look into that. As you see over here, there's the strategy or the features, you know, there are 5 different features, some components, and we're looking into leverage yield farming. So as you see, the risk is high, and how do you actually generate the return? You get like token emissions, and you get the trading fees because people trade in that pair, and when they trade in that pair, you get some trading fees minus the borrowed interest. Okay, because in this case, you can do like single asset. You could do single asset. You could stake single asset, and you will be borrowing another asset. Okay, so that's how it works. Or you could do like both sides. You could offer like that equally, you know, an equal proportion. But the single side is always much more easier, you know. So because sometimes maybe a person doesn't have the second token, or they don't want to get it or something because they have no interest in the second token. So maybe they just have, like in our case, we just have shadow tokens, so we're interested in that. Okay, but you could do anyways. But just to make sure, like one of the main risks over here is impermanent loss, as I've shown you previously how to calculate that and how to assess that for yourself using a calculator. You can always go ahead and Google it, and you'll find it. And also you will find liquidation risk, okay, because it's leverage. You know, you're taking on more leverage, and once you take more leverage, you risk getting liquidated. Okay, so you always need to maintain your position. So as you see from here, like the APY lending is 63%. It's just an example of Ray and Serum Pool. 63 because it's low risk, and it's 67.5 APY because it's medium, you know, and then it's high here, so it's like 300% APY. Okay, so higher the risk, higher the return. Okay, let's go ahead and look into this. Okay, tulip.garden, go to this dApp, click on launch dApp, your Phantom wallet, connect your Phantom wallet or whatever wallet you have. I would advise Phantom wallet because it's much more user friendly and so good. Anyways, once you connected your wallet, you'll see these three options right here. Click on leverage farming, click on leverage farming right here, and I have actually created a position already, okay, that just test it out, okay. So as you see over here, I've provided, if you see provided over here, I've provided like 40 shadow tokens right here, and I have provided 0 USDC. I borrowed USDC, okay. So that's how I created the position, okay. This is just a test, nothing else. And test in the sense, yeah, I just want to test it, and see how it works, for a month or so, or maybe longer if it goes well, so on and so forth. But anyways, so as you see, like, we have more options such as like add collateral. If I want to add more collateral to this, let's say right here, you see this option like this one with a red sign, so it means like if this 18% becomes like 0%, and that means my position is going to be closed automatically because I'll be liquidated. Okay, so make sure this is always above zero, and whenever you see it like people, whenever they see it below like 10%, they always go ahead and add collateral, or they just, if they don't have collateral, they just go ahead and close the position. But yeah, depending on whatever the situation of the equity value is, okay, if you're in profit or in loss and so on and so forth, you can see that right here, okay. Yeah. The total position over here is $183, which consists of like $90 of USDC borrowed, and shadow tokens is this much because I have added like leverage, as you see right here. Leverage is like 3x, which is the highest on this platform, 3x, and the borrow APR is like 13.72, and this is the daily APR, and the annual compounding APR, which is 630%. But anyways, this is mainly when we talk about APY, this is what we're talking about. Like this is what we see. Hey, what's the ROI, or like the return? Like not ROI. I mean, what's the APY? What's the return on this if I add, if I add liquidity, if I add collateral to this position, was the return rate. So that is the rate, okay, yearly compounded. All right. So, anyways, that's like once you created a position. But actually, how do you actually go ahead and create the position itself? Once you come here, just go to leverage farming. You want to search for SHDW shadow. You might have any other token, but in our case, we'll stick to shadow tokens because this is the third utility of shadow token that you can do apart from lending and creating an LP. So once you do that, you go ahead and check that checkbox as you see over here, these two checkbox, and you'll find these two. All right. So you'll see two different shadow and USDC, and shadow and Sol. Okay. So Solana native token. Okay, and both of them originate from Orca, as you've seen. Like in the previous video, we have seen like how to do that in Orca directly. But here, when they bring that Orca pool directly to Tulip, Tulip gives you that option to actually go ahead and leverage it up as well. Okay, so yeah, this is what mainly we all are always looking at. The first thing, hey, what's the APY? But yeah, we first thing we need to see is like, hey, if the APY is high, that means the risk is higher. As simple as that. If the APY is low, that means the risk is low. So by looking at this, you can tell, hey, this is a much more riskier pool because two assets are volatile assets. But in this case, you see, like USDC is a stable coin. Okay, so there's less of risk, and that's why the APY is low. Simple as that. All right. Yeah, so basically leverage over here. You don't need to adjust right now if you want to. You just click on like farm 3x right here, and then you could go ahead and like adjust it over here. All right, so and always just remember, like, to see this note, total deposit amount should be at least $10. So in my case, like, it's six shadow, and shadow is like 50, 1.5. So that means like I have some around nine. I don't have like $10 because I already created a test position right there. But like I mentioned previously, it's a single asset staking, as you have seen, single asset, and so we can create using our USDC as well. So USDC, let's say you put 10, yeah, so minimum like that, and always like uh, what like I mean, try with small amount first and see how the performance goes. Okay, and the performance varies, okay, depending on market conditions. And if you're comfortable with that position and if you want to add more, you can always do that. But always make sure to try, if you're trying out, make sure to try with a small amount. Okay, and that's the only thing. But if you have done this before, good for you. You can just go ahead and bam, 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 and you can be a DGen, okay? So feel free however you wish to do that. But anyways, we've provided 10 USDC right here, and what we're going to do is we're going to borrow shadow, okay? So if I put in 10 USDC, um, you'll see this component which says like borrow asset. That means by doing this and by having a leverage of three, like over here, by borrowing shadow and by adding a USDC, what is the framework? What is your strategy? How are you thinking in this case? If you do, and if you go ahead and click farm, basically you are expecting the shadow token price to come down a bit, to go lower. Okay, you're bearish on the token's price. Okay, and that is why you're hedging using a stable coin, because stable coin, it doesn't move up and down. It just stays like fixed. So that's what you're that's the position that you're trying to create. Okay. But if you want to actually visualize this in a simulator mode, you can simulate this, and you can see what sort of a risk that you're taking. If I increase, like, the USDC position right here, you will see three different things right here. But the important thing is this red line, okay, which is the liquidation threshold. That means, and this line is the current price of the shadow token. All right, so just to be clear, this is 1.1, 1.53. This is the same price, okay? So it all comes from like the oracles that they have, so yeah, they get the data from CoinGecko and all these market, listing sites. But anyways, so as you see over here, this is the current price, this is the liquidation price. That means here you're expecting the price to go down. But if the market decides if the market says, hey, no, we changed our mind, we are going up, okay? So if the price goes up and it goes to $2.50, as you see from that black box, token price 2.50, that is plus 63%. If it increases 60% from here, goes to $2.50, your position is going to be closed automatically, and you're going to be liquidated, and your position is going to be closed automatically, and the balance is going to be sent back to your amount. Mostly if you're yeah, that's that's what you see. So here, if you hold, if you see the liquidated, it shows the skeleton sign. That means finito, like finito, dead. And you can see all the other stats as well. 30 days farm profit would be minus $40, $41. If you just hold a, if you just hold this position, that means you like, let's say you do this, like, I mean, if you go 1x, it simply means like you just like holding, okay? You like yeah, basically no fun, let's say, okay? So once you start scrolling, generally this is a sweet, just try with like two, but like if you're trying with three, just make sure like, trying with a very small amount first. But anyways, once you adjust that and once you're comfortable, whatever position that you want to create, for yourself, and just to make sure like you are safe, and safe in the sense like for that moment. And always, as we have seen, you can go ahead to your positions and you can add collateral as well. Okay, so as we have spoken before, and kill buffer, as we mentioned previously, 18% right here. So if it goes to zero, finished. Okay, so just make sure to maintain that. If it drops below 10, just make sure to add some collateral or something like that. Yeah, but also remember, like, the liquidations could happen like while a person is asleep, so and just make because this is a very actively managed position, or if you don't want to actively manage, you add more collateral and you make this close to like 100%, so in that case, like you don't have to worry about not unless like the price moves up or down like very violently. You don't have to check your position every minute. Okay, so it's like that. So try to always keep a nice buffer right here. Once you do that, you're comfortable, you're set, etc., etc. Go ahead and click farm. Once you click farm, you will get this nice little phantom wallet giving you this option to go ahead and verify the transaction. Okay, so here it is asking me for my wallet address, like ID, password. All right, so yeah, so you will see this two option, approve, cancel. In this case, I'm not going to do it. I'm already testing one strategy, so I'm going to cancel it, but just go ahead and approve it, and you will see a notification over here. Not this I rejected, but you will see like transaction sent, transaction successful, and all that stuff. All right, so that's the way you can go ahead and create, your position. You can do the same with like Shadow and Soul. It's the same logic. Just understand like these two are volatile assets. So if you are adding Soul and if you're borrowing Shadow, that means you're bearish on the Shadow token price. You're bullish on Solana price. But in this case, like Shadow and Solana, I think. eh, Not I think, like I probably tend to believe they would go together up because the utility of Shadow, it depends on the usage of like the Solana network, because it's a utility token for the Shadow drive and the Shadow protocol itself, which is we have discussed in the previous video. It's trying to solve for this decentralized storage, so it's a utility token within that. So I expect like Shadow and Sol to move together, might move together. But anyways, it's how you want to look at the market. Yeah, it could be that like you expect Sol price to go a bit low, but you expect at the same time Shadow price to go higher. So you can borrow Sol, you can add Shadow. You get the logic, but it's the same fundamentals. The fundamentals is the same. It'll look the same. Nothing will change. Okay. So once you do that, like once you click on that farm button over here, let's go once more, farm, and you set your position, check the simulator, what's your best position and how you want to create it, and so on and so forth. Click on farm. In this case, okay, let's see, zero point 0.5, like something like this, whatever, and click on farm, approve your transaction. Once you do that, you'll come to your positions right here. Once you do that, you'll see the position, and always keep an eye on this. It's very important if you want to maintain it long term. And drops below 10, go ahead and add collateral. Same thing, which one you want to add. Okay, so let's say you have more shadow tokens. Okay, because some people are staking their NFT and they're getting like shadow tokens each day, like 27 shadow per day, like 27 shadow tokens per day. So people probably they have like 10 different NFTs and they're getting like 270 shadow token. They can come and add collateral to this position so that the kill buffer is wider, far much more higher percentage. And if you want to close it, you can go ahead and do that as well. Just close it, and it will immediately close you out of your position. If you want to convert your position into USDC, choose this option, read what it says over here. It's nothing. Your position value will all be converted back to USDC and returned to you after paying the debt. Okay, what's the debt? Right over here, debt value. The current debt value is so much. Okay, so yeah, and minimize trading, we will convert the minimum required amount of tokens into USDC to pay back the debt, return the remaining assets to you. Okay, so yeah, same thing. They will convert, they will clear the debt and they'll give you in the shadow tokens back to you, back to your wallets. That's what it means. All right, so here if you want to close just partially, like you just want to close like 20% of this position, you can go ahead and do that, and automatically, as you see, once you scroll, you will see the percentage, how it would like be, your updated position, what will it be, and what will you receive approximately, and so on and so forth. So you can, once you do that, just close position. You don't need to do that, but if you want to partially, slowly, maybe you want to close, because as this position grows, if it's profitable, you get some yield, so if the size of your position is like really huge, that means you're making a lot of profits or yields or income from this strategy. You can slowly start to take some profits or take some gains, and that's why you would take partial close, or for whatever reason that you need. All right, so I think that's it. I hope you guys liked it, and yeah, the previous two videos, just go to Google and type this. All right, so type lend shadow token. Okay, this is the video. It's a 6-minute video, and if you want to check out the other video, which is also related to shadow token, where you can add liquidity, create a pool, and add liquidity and become a liquidity provider, you can go ahead and check this video out, which is for 56 minutes. So watch this. This is a medium risk strategy to add liquidity. Lending shadow token is a low risk strategy, and yield leverage yield farming or leverage farming is high risk strategy. Okay, so however you want to take it. Okay, so and the same logic applies. Low risk, less return, high risk, high return. Okay, so it's up to you how you want to create your portfolio. I'm trying, like previously I have tried, I've still created a small little position on this. I've lent some shadow as well. I've created a position here, as you can see. So yeah, so I'm trying out all of this with like small amounts, so that yeah, just to try, and always by default, smart contract risk and counterparty risk of the platform itself, it goes by default without saying. Okay, so take a note into that as well. So I'm not trying to scare you. I'm just trying to inform you all the risk, and all that. And in my case, I really don't care. So that's why I want to try out with like first a small amount and start to get comfortable with like these platforms, and try to find what is the correct strategy, how's the market, and if you're an active trader, I think all these strategies could potentially help you a lot, if you're really active in DeFi and if you're quick. That's what I can tell, all right? But if you just want to take low risk and just lend shadow, that's also fine as well. Okay, you can do that in Francium and in Tulip right here, lending. I've shown it in the video. Just go ahead and watch that video. You'll understand everything. We've done that. All right, so if you liked it, give it a thumbs up. And if you want to share this information with your friends and colleagues and discuss about it, and just discuss among your colleague or your friends, and just improve your knowledge more. So yeah, like it, share it, and subscribe to the channel if you're new here, and welcome to the new subs. and I love you as always. Good evening, and see you when I see you. All right.